Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our feed and we'll have your questions addressed by our guest on the show. But before we kickstart, let's see what the global handover looks like. It's a mixed close for Wall Street as the S&P 500 and the Dow Jones see minor cuts while the Nasdaq closes with marginal gains ahead of the jobs data for November. Stocks in Asia Pacific open with cuts as investors seek clarity over China's reported easing in COVID restrictions. The SGX Nifty meanwhile signals a lower start for the Indian market. Markets at record high for us. Time to book profit or stay put. Auto sales, Bandhan Bank, Yes Bank, PB Fintech and Orchid Pharma in focus today. All right, let's get going and discuss some stocks that are likely to be in focus and the overall market mood with Nirav Cheda of Nirmal Bang. Good morning, Nirav, and thank you for joining in. Talk to us about the trade setup, how Nifty is poised, and if there's anything interesting on Bank Nifty as well that you want to flag off.
Yeah, thanks, Karunya, and thanks for having me here. For Nifty, the basic premise here is, you look at the data. Overall, the whole data is positive, except for two things. The PCR has shot up. It's above the 1.5 odd levels. Also, the cost of carry, the premiums, which are very high, and they've been high from the rollover period. Except for these two things, major data is positive. So you've got an all-time high and, a flag pattern kind of a breakout on the longer term charts, which is positive. Overall open interest is still low. The VIX, which was one of the most important things in the last, 6 months to 1 year, that has come down from 20 to 23 or to, below the 15 levels, which is a very, very good sign. So whenever, the VIX comes down below the 15 levels, you see such moves in the index and the stocks where, a breakout comes in and there's a linear move. Even though, because of the VIX, we are opening up or, majorly we are opening gap up. And then, from the last 2 weeks, you are seeing, a steady move, range bound trade in terms of Nifty. But yes, it is drifting upwards and one should definitely, play this trend as well. I believe Nifty should be bought. The downside can be, 18,700, that is the support level. So once 18,700 is, held on still, you will see Nifty moving up and this is the future levels, okay? So I believe Nifty can go up towards the 19,200, 19,250 odd levels, probably even 19,500 in the coming time. But because of the other two factors like the PCR and the cost of carry, keep stop losses. 18,700 if broken, exit long positions and, stay away from the market if that level is broken. From the Bank Nifty perspective, there's one thing that I would like to tell you all, that is in the rollovers. The open interest has been very high. And whenever such things happen, what really happens to that stock or the index is it starts to consolidate. And that is what is really happening in Bank Nifty. You are seeing stocks, moving sideways or probably, correcting as well. So I would say stay away from Bank Nifty for the next 5 to 7 sessions because it is likely to be in consolidation while the other sectors, take leadership. Also, what happens is because of high open interest, almost everyone is owning stocks in banks or Bank and Nifty. And, over ownership is taking shape. And that is why you need some liquidation of positions. And that is likely to come in Bank Nifty. So both these indicators are negative. And that's why I'd say, the only trade in both the indices is long Nifty at current levels with a stop loss of 18,700.
Okay, great. Nirav, request you to stand by. I want to bring on board Hemang Jani as well to talk about the fundamentals of the market and what's happening there. Hemang, good morning and thank you for joining us today. what do you make of the current uptick that we're seeing? Benchmarks at record highs, and it's been happening for quite some time now. Is it a good time to book profit or at least part profit, or should one stay put? What have you been advising clients?
Good morning, Karunya. Thanks for having me. I think overall we are in an uptrend, and it is largely driven by the developments in terms of possibility of a lesser degree of rate hike. Also, we are seeing that post festive season, the incremental data points continue to be positive, and the fact that the commodity space is showing a lot of weakness, primarily the crude and the derivatives of the crude, and that is definitely helping. So December typically is a month where the second half the activity gets a bit dull. So there might be a bit of a consolidation at the index level, but I think the broader market, the mid cap and the small cap sectors, they were anyway underperforming, and we are seeing initial indications of traction building up. So I think one should really focus upon the mid cap and the small caps at this point.
Okay, well, that's interesting perspective. But what about valuations? Even at these levels, is there enough comfort? Is there enough risk appetite among investors? What are you sensing? Will the inflows keep coming, at least on the domestic front?
So valuation wise, we are in a fair zone, and it all depends upon what kind of earnings picture one is really looking at. So post this Q3 numbers, we feel that we're at about 21 times. And overall next 2 years also we have a positive outlook in terms of earnings growth. And so we are not perturbed by the valuations per se, but what is important is what are the pockets to really participate in where you are seeing incremental earning growth visibility or momentum, and which is where we would really focus upon.
Okay. And you rightly said that there is some momentum building up in the broader markets, which was not happening until very recently. But within that, any sectors, names or baskets that one can focus on that look promising?
Absolutely. I think cement as a space is looking very positive because you're seeing incremental activity picking up, possibility of a little bit of price hike coupled with cool off in certain commodity costs. So this is one sector we have a positive view. So JK Cement, JK Lakshmi, Dalmia, Bharat, these are the names that we like. Apart from that, I think mid-cap IT is where we are seeing action last couple of days. And within that, we like Persistent System. And we also like emphasis in Cyient. These are the names where we have a positive bias. And of course, real estate is something that we've been liking a lot. The sector has gone through correction, and looking at the new registrations data and the overall scenario for the real estate from a medium to long term perspective, we like both Lodha, Oberoi, even Brigade, which is a Bangalore based company.
Okay, well, thank you so much once again for chatting with us. But would you say right now, just before I let you go, I mean, in terms of the overall mood of the market, would you say the bull run is going to continue? Are we near the peak? Is it a buy on dip market? What, according to you, would be the best way to describe what's going on?
I think, Karunya, given the way we have outperformed and the incremental data points in terms of commodity prices, dollar index are shaping up, and the fact that the Fed is going to be slightly more accommodative, these are very positive indications for us. So we are nowhere near the peak. You might see a phase of consolidation or a small correction, which is part of the bull market cycle, but we are looking at a very significant upside in the market over the next 12 to 24 months.
Okay, great. That's a good way to leave it at that. Thank you so much, Hemang, for joining in and sharing with us your reading of the market. Okay, back to talking technicals with Nirav. Hi, I want to understand your view on cement stocks, because that's something that has been doing the rounds quite a bit, as far as the market chatter is concerned. Any cement names that, especially from the broader markets, that stand out for you?
Yeah, see, cement as a space, as a whole sector, it had been underperforming for quite some time, except for a couple of stocks, Ambuja and ACC. Others were actually underperforming. And now, if you look at it, I believe most of the stocks are on the verge of a breakout or have already given a breakout. So I really like this space in terms of technicals. I believe the Ultratech Cement at this point of time, it has given a few super breakout, a good flag kind of a formation breakout at above the 7,000 levels. It can now move towards the 7,800 to 8,000 levels, which was its all-time high. So, it can retest that level. Look to buy this stock from current levels. Also, India Cements is breaking out again, a similar pattern, flag kind of a formation breakout after a long consolidation of about 12 to 14 weeks. This stock is now moving out. The breakout level is around the 250. I believe that that will be achieved very soon, and you will see it move towards the 280 to 300 level. So you can buy this stock as well above the 250 level. So these two stocks in the large cap space, at least, I like a lot.
Okay, all right. Let's also understand the technicals of some of the stocks, individual names that could be in focus in today's trading session. The first one is Bandhan Bank. Plutus Wealth Management has bought 90 lakh shares there, a close to 0.6% stake, and the average buying price has been 235.7. In fact, even at Moneycontrol, we have been talking about Bandhan Bank and even an RBL, and if they could potentially be a good contra bet, because up until now they have been rather sluggish and a bit of a laggard. Talk to us about your view and your analysis of how Bandhan's chart is looking.
Yeah. See, I'll tell you something, Bandhan Bank had already made a low around the 2020 March levels, the low was around 180 odd. Ever since then, it did go up towards 300, but slowly but steadily it is witnessing some selling pressure. See, what I really look at in technicals is how the volumes of the open interest is moving. And in the last couple of weeks, you are seeing very high volumes in Bandhan, and stock is showing very good strength. You are seeing, the selling pressure decline as well. So definitely I'm positive. I believe this stock can hit a good run, probably move towards the 300 odd levels. So look to buy this stock. I don't see much downside from current levels. Probably, 220 can be a good stop loss for longs here. And you can see it really run up towards that 300 levels, which has been a strong resistance for this stock. Also, one thing to note here is if this 300 level is broken, you will see the stock move towards the 450, 500 levels, because, the overall setup is very good for this particular stock. Okay. I don't see much downside.
Okay, all right. What about Yes Bank, another name from the broader markets that could be in focus? They've got RBI's nod for planned stake sale to Carlyle and Advent. Now, both of these PE firms, Carlyle and Advent, want to acquire 10% stake each in Yes Bank. So they've got a conditional approval for that from the Reserve Bank of India. Now, Yes Bank, we get a lot of questions as well for this one. It's still a trader's favorite. Talk to us about how that one's looking.
Yeah. So, see, this one is a difficult nut to crack actually. This stock, if you remove the name, it's a beautiful pattern. There are volumes which are taking shape from the last 2-3 years, but that breakout is not materializing. So, I would probably be take a breakout trade above this 19 levels. Once this 19 levels is broken, which is a very important resistance for this particular stock. Once that is broken, you will see this stock rise to 40, 45 levels. But, until 19 is broken, I don't think one should be trading or, taking long bets in this particular stock, because, it moves up and again witnesses selling, comes down again to support levels, which is around the 17 to 15 level. So, don't take a buy call at this point of time, only above breakout.
Okay, all right. Now, I don't know about overall retail investors, but SoftBank clearly is in a profit-taking spree as far as Indian markets and stocks are concerned. If we look at PB Fintech, now what we understand is SoftBank is going to be selling 5% stake in the company. They owned 10% initially, and now after hiving off that 5%, they will be left with another 5%. So 2.28 crore shares is what they're looking to sell. The base price of this sale is at 440 rupees a piece. Now, PB Fintech is something again that has been in the limelight for quite some time, and not just PB Fintech, but recently listed consumer tech companies, the likes of Paytm, Nykaa. PB Fintech has also taken quite a bit on its chin. Now, talk to us about this one particularly and how the technicals are looking. I mean, I understand there's not much of a historic pattern to track, but if you could give us some idea of where it's headed.
Yeah. So yeah, see, generally for a technical person, you need some data, but I'll try to tell you what can probably happen to this stock. See, after listing, this stock has had a good run up, but from the last couple of trading sessions, the last week or so, it is witnessing some consolidation. A flag kind of a formation is made in between 460 and about 440. I believe if 460 is taken out, you will see the stock move up towards the 500 odd levels. The volumes are good as well, so you can probably ride the trend at this point of time. You can keep stop losses at 440 for your longs.
Okay, all right. The last stock on my list today is Orchid Pharma, a name that we hardly ever discuss actually on the show as well. They've launched a 500 crore worth of QIP issue. Dhanuka Group is looking to meet the mandatory obligation to dilute 15% stake by March 2023. So it's part of that process, 500 CR QIP. Talk to us about Orchid Pharma. Last 1 month has been very, very muted, very, very slow. What's the way forward likely to be?
Yeah, for this stock, last 1 year has been muted. This stock is actually, in a snooze. I believe one shouldn't be buying this stock at this point of time now. I believe it can come down towards the 350, 330 levels. Once it comes there, probably, again, some buying will come in, but not at this particular time. It's near the resistance zone of 390 to 400 odd levels. It has been very difficult for this particular stock to break this level. So I believe if you are holding longs, exit and wait for that 330, 350 levels.
Okay. Since we're talking about pharma, I want to address one of our viewers' comments as well. Suresh is writing to us and he wants to know your view on Natco Pharma for the long term. Now, how's Natco looking? Is that any better or even that's an avoid for now?
Yeah. See, it's a curious case for Natco Pharma. I, for once, had believed, when it witnessed a breakout about that 1,000 levels in July 2021. I believe, this stock will move out, but from there, the stock is half. It has come down definitely, but in the last 2-3 weeks, you are seeing that the selling pressure is coming down. Also, there's a positive divergence on the RSI, which is a positive sign. I believe, if you're looking for a longer term period, yes, definitely it's a good buy at current levels. There are a host of supports in between 560 to 520 odd levels. So it's a good level to add, but for long term, 520 should be your stop loss. And you can expect anywhere in between 750 to 800 levels to come. But again, it will take about 3 to 6 months to come.
Okay, all right. I'm getting a lot of comments and queries on cement space. Guys, we've already discussed cement. So if you want to go back in the feed after the show, you can watch it there. But moving on, I want to address Sandeep's question. He bought Sona BLW for 578 rupees a piece and wants to know what the future holds for this stock. Now, clearly the stock is still below the buying price. But if we look at the last 10-12 days, it has started to build up some momentum. Now, the question is, will that sustain? Will the upward trajectory continue?
Yeah. So, see, again, for this stock, it's very similar to what Natco has been doing. Again, you're seeing, the RSI having a positive divergence here, and this stock, almost halving from 800 odd to about, 400, 450 odd. See, very important resistance for this particular stock is around 500. If that is taken out, you will see the stock rise again because the volumes are there, but the trend is not supporting. So once 500 is broken, the trend becomes positive, and which is a good sign for the stock, and stock can then rise towards the 650 700 level. So I would suggest wait for some time, let it cross above 500 and then take aggressive bets.
Okay, all right. So better to wait for the stock to meaningfully cross that barrier of 500 rupees. Okay, Bhagwati is writing to us. They want your view on DMart. They're asking if they should continue to hold or sell. Buying price has not been mentioned, unfortunately. But how are the technicals looking for DMart?
See, unfortunately, I believe one should be exiting this counter. It's had a beautiful bull run, but the overall setup is negative. It's making a lower top, lower bottom formation in the longer term charts, which is not very good. Also, near the highs of 5,000, some huge volumes are witnessed. That means, the smart buyers which had bought at lower levels, they've exited, and I don't see any volumes coming in the last month or so. So definitely, it can probably witness more selling pressure. It can come down towards the 3,500 to 3,000 level. So exit this counter at this point of time. Let it come down, and once that it takes support, that is when you buy again.
Okay, all right. The next query is coming in from Santosh. He wants your view on Happiest Minds. Now, again, last couple of days, in fact, couple of weeks, we've seen some positive action on the stock. But is that a trend playing out, or was it a temporary uptick?
I think it's a temporary uptick. See, the volumes are totally missing in this stock. Ever since it made that high of 1,500, the stock has gone into snooze. And I believe, there is a strong resistance at the 1,000 levels. From the last 10 weeks, it crosses 1,000 and again comes down on a closing basis. It's not a very good sign for the stock. I believe the stock can come down further. It can come down towards the 800, 850 levels. So don't buy the stock at current levels.
Do you have a similar view for KPIT as well? Trilok is writing to us, and since that also belongs to the mid-cap IT space, is it looking similar?
No, for KPIT, again, my view is a little different. The pattern for KPIT is much, much better than Happiest Minds. I believe it's making a rounding pattern and it's on the verge of breakout, and it can probably witness a good breakout. So on a closing basis, on a weekly closing basis, once 730 is taken out, you will see a good buying flow in this particular stock. Also, the volumes are there, which was not the case for Happiest Mind. So I believe one can buy this stock, but only above that 735 levels on a closing basis. So let it close above the 735 levels, only then look to buy. And after that breakout, you can see the stock coming up toward the 950 1,000 level. So you can keep it for a period of 2 to 3 months. It can give you good returns.
Okay. Very quickly then, one more query since we have a couple of minutes. Mithilesh is writing to us about IDFC First Bank. His entry point was 50 rupees and he wants to know what the future holds for IDFC Bank for the long term. So should a long-term investor stay put?
Most definitely. See, I think the banking sector as a whole, from the long-term perspective, will do very well because in the last 3-4 years, banking and financials, they've done nothing. So I definitely believe IDFC First can witness good buying action. For the next 10-15 days, it will probably correct or consolidate. But in the longer term period, I believe it can hit 80 odd levels, which was its all-time highs as well. So you can look to add more positions in the interim. And whenever you get a good dip, add positions. You can keep a stop loss of around 45 for your longs and expect 75 to 80 levels to come.
Okay, great. Nirav, how about your stock picks? Our viewers are waiting for to hear what exactly is in store that you have for them.
Yeah. So for today, I have two picks. First one is Cummins India. Cummins India has witnessed a 10-year breakout, which is a very rarity for a particular stock. And whenever such patterns come in, you see very aggressive moves, and stock can probably double as well in the longer term period. But from a near term perspective as well, buy Cummins India. The target is 15.10. You can keep a stop loss of around 14.10 for your longs. The second stock is M&M Finance. It's a 5-year breakout candidate again. The breakout has come in. It has retested the breakout and a beautiful pattern, and it is right time for this particular stock to move up now. It can reach 230 to 40 odd levels very soon. So you can look to buy this stock with a stop loss of 215.
Okay, Nirav, before we let you go, quickly your reading of the technicals of Reliance Industries as well, because this one again has seen very strong momentum, was a big catalyst in pulling up the overall benchmark given its weightage. Talk to us about Reliance and the prospects it holds.
Yeah, see, Reliance has gone into consolidation from the last 6 odd months, and it is now, after a long period, it has witnesses a flag kind of a formation breakout on the near-term charts, and that breakout has come above the 2600 levels. Now, a very important level for this particular stock is the 2800 level. So, if that 2800 level is broken, that consolidation of 6 months is finished and a new trend starts. And that is what I'm waiting for. I will not be a buyer at this point of time, but I'll definitely buy aggressively above that 2800 levels. If that does cross, definite buy with a stop loss of 2700. I believe it can go towards the 3400 to 3500 levels very soon once that breakout comes in.
Okay, great to know that. Thank you so much, Nirav, for joining us and sharing your views on different stocks and addressing our viewer queries. With that, it's a wrap. Thank you for watching and have a great weekend.